What's up, everybody? GenExDividendInvestor here. If you're new to my channel, then welcome. My goal is to inspire, educate, and entertain you as I share lessons I've learned from investing for over 25 years in the markets. My favorite strategy is dividend growth investing, so if that interests you, then please consider subscribing, clicking the bell icon to be notified when I post new videos, and also please hit that like button if you love dividends. In this video, I'm going to reveal the top 10 stocks for November that investors on my free Dividend Discord chat server voted that they're buying or plan to buy. I'll also be sharing my perspectives on things. After revealing the top 10 stocks, I'm going to tell you an inspirational story that I think you'll enjoy. For context, Discord's a free chat service over the internet. My Dividend Discord server now has around 5,000 investors on it, and it's growing quickly. In fact, I'm the #1 Google result if you type in Dividend Discord server or Dividend server or world's largest Dividend Discord. We have dividend investors in there with decades of experience that became millionaires through investing, and people who have never invested and are just interested to learn, and everything in between, from teenagers to people in their 70s from around 50 countries around the world. On my Discord, I run a poll which lets people vote on all the stocks they're buying or plan to buy each month, and I've gotten hundreds of votes with more voting all the time. So these stock picks comes from a bunch of investors who are focused on learning and becoming better, which is why they're on my Discord in the first place. As I share these top 10 stocks, realize that I'm not analyzing businesses, I'm just sharing a few quick metrics to give you context. When analyzing a business, I normally like to look at growth trends over time, with cash flow growth trends being very important, as are revenue growth trends, profit growth trends, etc. However, this video isn't about that. The 10th most popular stock in the poll with 23% of voters is a popular financials dividend stock, and that's JPMorgan Chase, ticker JPM. I personally have invested in Goldman Sachs, more as a capital appreciation play than a dividend play, but I've been glancing at JPM from across the room for quite some time. JPM has a consensus analyst rating of a buy, a decent 10 consecutive years of dividend increases, an awesome 38% payout ratio, a nice 3.47% yield, an insane 21% 3-year dividend CAGR, a nice 13.5 PE, and a 1.18 beta. Many folks don't look at beta, but it's one I like to be aware of, so I'll share it. JPM is at $104 a share, below their 52-week high of $141 and above their 52-week low of about $77. Many banks have been hit hard by the pandemic, but as you can see, JPM is clawing their way out of it. Okay, the 9th most popular stock in the poll with 24% of voters is a great tech company, which Finviz calls a financial company, so maybe we should call it FinTech, which unfortunately isn't an official sector, and of course I'm talking about Visa, ticker V. V is a consensus analyst rating of a buy, a decent 11 consecutive years of dividend increases, an awesome 20% payout ratio, a crazy low 0.61% yield, an incredible 3-year dividend CAGR of 21%, a very high PE of 37.6, and a 0.93 beta. V is at about $198 a share, below the 52-week high of $217 and above their 52-week low of about $134. Visa is really kicking it. The only risk I used to think of was Visa was crypto, but they already have hired a head of crypto and are positioning themselves to be a leader in the space. Awesome. Okay, the 8th most popular stock in the poll with 25% of voters is a strong tobacco company in Altria, ticker MO. Did you know that the name Altria is claimed to come from the Latin word for high? Now, tobacco has headwinds, but they look really compelling to me at these prices, financially speaking. MO has a consensus analyst rating of a buy, a crazy 51 consecutive years of dividend increases, a payout ratio of around 80%, a crazy high 8.8% yield, and a powerful 3-year dividend CAGR of 12%, and a 0.44 beta. MO is around $39 a share, below the 52-week high of about 52 and above their 52-week low of about 31. Many tobacco companies are facing declining sales in many areas around the world, so they're raising prices to compensate. Many are also diversifying into products like cannabis and vaping to improve their revenue momentum. Believe it or not, I once had a prestigious doctor tell me that cannabis was often used to treat an issue I had, though he said he couldn't recommend it. I think he winked at me when he told me that, but maybe he just had something in his eye. Okay, the 7th most popular stock in the poll with 27% of voters is one of the best industrial companies around, and of course I'm talking about 3M, ticker MMM. They develop so many products including post-it notes, scotch tape, ace bandages, etc. 3M has a consensus analyst rating of a hold, are a dividend king at an incredible 62 consecutive years of dividend increases, have a great 49% payout ratio, a decent 3.46% yield, a great 3-year dividend CAGR of 9%, an OK PE of 19, and a 0.99 beta. 3M is about $170 a share, below the 52-week high of 182 and above their 52-week low of about 114. 3M was hit hard by the pandemic, but look at that beautiful recovery. And they have some very sticky products. I crack myself up with my business puns. Okay, the 6th most popular stock in the poll with 29% of voters makes the smartphone I use, and that's Apple Computer, ticker AAPL. Apple has a consensus analyst rating of a buy, or at 9 consecutive years of dividend increases, a very weak 0.71% yield, a great 3-year dividend CAGR of 11%, a high PE of 35, and a 1.18 beta. Apple is about $115 a share after the recent stock split, below the 52-week high of 138 and above their 52-week low of about 53. Apple has been absolutely killing it, so congrats to all you shareholders out there. On we go. The fifth most popular stock in the poll with 37% of voters is one I featured in my latest video I just released called the Top 5 REIT Dividend Stocks, and that's none other than the monthly income dividend stock itself, Realty Income. O has a consensus analyst rating of a buy, recently became a dividend aristocrat with their 25 consecutive years of dividend increases, have a great 4.63% yield, a mediocre 3-year dividend CAGR of 4.26%, and a 0.66 beta. Now, traditional metrics such as earnings per share and PE ratios are not a reliable way to estimate the value of a REIT, so professional analysts often use a measure called adjusted funds from operations to estimate a REIT's value as its true residual cash flow and a better predictor of the REIT's future capacity to pay dividends. Watch my other videos for those details. So during the second quarter of 2020, the company distributed $240 million in common dividends to shareholders, representing 81.5% of its AFFO of $295.2 million. Their year-to-date June AFFO payout ratio was around 80%. The FFO per share for the first 6 months in 2020 increased from $1.62 per share to $1.66 per share. Beyond those metrics, it's also good to look at rent collection, and they collected 87.8% of their contractual rent in June, 92.3% in July, and 93.5% in August, so a nice increasing trend. Let's look at their stock movement in the last 12 months. O is currently about $61 a share, well below the 52-week high of 85 and above their 52-week low of 38. O has an allure for many investors with its strong monthly income. Okay, let's march on. The fourth most popular stock in the poll, with 38% of voters, has a new Series X console coming out on November 10th for $499 and a Series S coming out the same day for $299, so all you gamers out there can rejoice. And of course I'm talking about one of my favorite stocks, and that's Microsoft. Microsoft has a consensus analyst rating of a buy, are at a nice 17 consecutive years of dividend increases, have an amazing 34% payout ratio, a weak 1.04% yield, a great 3-year dividend CAGR of 10%, a high PE of 37, and a 0.93 beta. Microsoft is about $216 a share, just below their 52-week high of 233 and above their 52-week low of about 132. Jump on the Microsoft train or be left behind in the train station is all I can say about that. Okay, the third most popular stock in the poll with 39% of voters is one that I almost think of as a strong savings account, though obviously it isn't, and that's one of my favorite dividend stocks of all time, J&J. J&J is a consensus analyst rating of a buy, are a dividend king with a beautiful 58 consecutive years of dividend increases, have a strong 58% payout ratio, a slightly low 2.78% yield, an okay 3-year dividend CAGR of 5.98%, a PE of about 23, and a 0.7 beta. J&J is at about $145 a share, below the 52-week high of 157 and above their 52-week low of 109. Leave me a comment down below if you sometimes think of J&J as your other mistress. Now, if you made it to this point in the video, then I want to say thank you, and if you would like to more directly support me in my journey to spread the positive message about dividend investing, then please consider clicking on my Amazon affiliate link in the description of this video, and then go shopping online. As an Amazon associate, I earn from qualifying purchases. Another great way you can support my content is via signing up to be a Patreon member. Also, I have an M1 brokerage referral link in the description of this video. They normally run free cash promotions if you click on the link and then open a non-retirement account and transfer some cash in. Okay, back to the show. The second most popular stock in the poll with 44% of voters is AbbVie, a company I'm contemplating investing more in these days. If you want to learn more about the pros and cons of AbbVie, I recommend you watch the extensive deep analysis video I did on them, but the TLDR is that much of their revenue comes from a blockbuster drug named Humira, which should be well protected in the US until 2023. AbbVie's lawyers have built up a patent wall of something like 250 applications, over 100 of which were granted to keep their cash flow protected from others. AbbVie has a consensus analyst rating of a buy, or at 47 consecutive years of dividend increases if you count their time at Abbott, otherwise they're around 7 years. Have a payout ratio of around 45%, thus I think this data is incorrect. Have a high 5.6% yield, an amazing 23% 3-year dividend CAGR, a decent PE at 18, and a beta of 0.85. AbbVie is at about $84 a share, below the 52-week high of 101 and above their 52-week low of 62. Okay, and now the last, but certainly not the least. The most popular stock in the poll with an incredible 54% of voters is AT&T, ticker T. Beyond telecommunications, they own a variety of assets including HBO, which has the rights to Game of Thrones and are in development with a prequel called House of Dragons, in which takes place 300 years before the Game of Thrones we know. This new series is scheduled for 2022 release and I can't wait. T is a consensus analyst rating of a hold, or at an awesome 35 consecutive years of dividend increases, and I think this payout ratio is wrong because Seeking Alpha had them at 65%. And they have an incredible 7.48% yield and a very low 3-year dividend CAGR of 2.04%, a PE of 18 and a beta of 71. Now, the big concern about AT&T is their massive debt load, though executives have committed to driving that down. So either they succeed and this is a great time to buy, or they fail and you're left holding whatever. Time will tell. I personally am betting on them to succeed. T is at about $28 a share, below the 52-week high of $39.70 and above the 52-week low of $26. T is another one I'm considering adding to lately. They have some risks, and they have a history of showing they can't execute well, but I am still finding them very compelling. Okay, thanks. Now I want to tell you all an inspirational story I found online that I think you'll like. There once was a little boy who had a very bad temper. His father decided to hand him a bag of nails and said that every time the boy lost his temper, he had to hammer a nail into the fence. On the first day, the boy hammered 37 nails into that fence. The boy gradually began to control his temper over the next few weeks, and the number of nails he was hammering into the fence slowly decreased. He discovered it was easier to control his temper than to hammer those nails into the fence. Finally, the day came when the boy didn't lose his temper at all. He told his father the news, and the father suggested that the boy should now pull out a nail every day he kept his temper under control. The days passed, and the young boy was finally able to tell his father that all the nails were gone. The father took his son by the hand and led him to the fence. "You have done well, my son, but look at the holes in the fence. The fence will never be the same. When you say things in anger, they leave a scar just like this one. You can put a knife in a man and draw it out. It won't matter how many times you say I'm sorry, the wound is still there." Moral of the story? Control your anger and don't say things to people in the heat of the moment that you may later regret. Some things in life you're unable to take back. Thank you so much for watching all the way to the end. Leave me a comment if you did, I'd really appreciate it. These videos take a lot of time and energy for me to create, so please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. Thanks, I really appreciate your support. And please join my Dividend Discord server and come chat with me and thousands of other investors. Thanks, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.